Okay, so today we're tackling NextNav's third quarter earnings. And honestly, it's a really weird one. It's like reading two completely different books at the same time. You've got one story that's all about burning through cash, and another that's painting this picture of a massive, game-changing future. So our job here is to figure out which one of these stories is the one we should actually be listening to. Let's get into it.
Right, and this is the big question, isn't it? It's the central mystery of this whole report. How on earth does a company with barely any revenue and massive expenses somehow turn a profit? I mean, it just doesn't add up on the surface. And figuring this out is key to understanding the two sides of NextNav, what they are right now and what they're trying to become.
So here's how we're going to break this all down. We'll start with that confusing quarterly report and the financials. That's story number one. Then we'll look at the vision, story number two. After that, we'll talk about the big one, the FCC. And we'll wrap it all up with what this means if you're an investor looking at this high-stakes bet.
All right, let's jump right in. First up, report number one, the financials. This is the story the numbers are telling us right now.
Wow. I mean, just look at this. The difference is staggering. On one side, you've got revenue that's not even $1 million, and on the other, expenses topping $20 million. This is the definition of cash burn, and it is, without a doubt, the company's biggest operational challenge today.
So you do the math, and what's the damage? A nearly $20 million operating loss, just for the quarter. And here's the kicker. This isn't getting better, it's getting worse. That loss is 43% bigger than it was this time last year. So from a day-to-day business perspective, they are absolutely bleeding cash. But then, you get to the bottom line and, wait, what? A net profit? Almost $500,000? Okay, hold on a second. We just saw a $20 million loss. How is this even possible? Where did this, phantom profit just magically appear from?
And here's our answer. It's something called a non-cash gain. Look, the profit didn't come from selling anything. It came from a massive $23.6 million paper gain. Think of it like this. It's an accounting adjustment on the value of some financial instruments they hold, like stock warrants. It's not actual money coming into the bank. It's basically an accounting entry that flipped that huge operating loss into a tiny net profit on the books.
Okay, so that's the story the numbers are telling. Now let's totally switch gears and look at report number two, the vision. This is the story that management is telling about the future, the one they really want us to pay attention to. And this quote from the CEO, Mariam Sarand, really says it all. Their goal is to be a complement and backup to GPS. I mean, let's be clear, they're not just trying to sell a new gadget. They're trying to build essential national infrastructure. Think about how much we rely on GPS for, well, everything. Now imagine it gets jammed, or spoofed, or just goes down. Having a backup isn't just a nice-to-have, it's a national security issue. So yeah, this is a huge, incredibly ambitious goal.
And they're not just talking a big game, they're actually making moves. Just in this past quarter, they pulled off a successful 5G demo, they locked in their agreement with AT&T until 2028, that's a big deal, and they scooped up even more spectrum licenses. These are the kinds of tangible steps you want to see. They're hitting real milestones, both on the tech side and with crucial partnerships.
Now this number is maybe the most important one for that vision. They have over $167 million in cash and investments on hand. So remember that $20 million a quarter burn rate? Well, this pile of cash gives them a pretty long runway. It buys them time, years actually, to keep working on the tech and wait for that one last giant domino to fall.
And that brings us to the ultimate catalyst. Because in the end, this story isn't about the tech or even the cash. It all comes down to one single decision from the FCC. This is the one that changes everything.
And here it is, plain and simple. Their whole business model for their main service, TerraPoiNT, hinges on the FCC giving them the thumbs up to use their spectrum for this purpose. Until that approval comes through, the business is basically stuck in neutral. The grand vision is just that, a vision. It can't start making any real money.
So where does that leave us as investors? It's a classic high-stakes bet. You have to weigh the reality of today's numbers against the incredible potential of tomorrow's vision, all while knowing there's this giant question mark from the FCC hanging over everything.
And this really lays it all out, doesn't it? On one hand, the risks are staring you right in the face. They're burning through about $20 million a quarter, they're basically pre-revenue, and their fate is entirely in the hands of the FCC. No wonder this stock has been underperforming. But then, you look at the other side. The reward.
I mean, they hold the largest portfolio of these specific licenses, they have a war chest of cash, they've got big-name partners, and the market for a GPS backup is just enormous. Okay, so let's get to the next call, our outlook. First, what to watch for in Q4. Honestly, don't even look at the revenue. It's not the point right now. The only thing that matters is progress on their strategic goals. Any new tech demos, any new partners, that's the news. Second, the stock price. Look, this thing is going to be volatile. It's going to swing on any hint of news or rumor out of the FCC, not on its financial fundamentals. And finally, our rating. We're calling this outperform speculative. And let me be super clear about that speculative part. This is not a bet on a steady, growing business. It's a long-term, high-risk option on a technology that could be a total game changer if they get that regulatory green light.
So when you boil it all down, NextNav's future is just not in this earnings report. It's in a future decision that's going to come out of Washington, D.C. Really, the bet here is that patience is going to pay off. The Q3 numbers just tell us they have the cash to be patient. So the whole investment thesis rests on one simple but huge question.
And of course, please remember, this is not financial advice.